Good morning. How are we all doing today? So we have a failure pattern here, but it's at resistance. So can it get above this high? Well, it's starting to. We shall see how far it gets today. But that is a giant red reversal bar that had no follow through. And black and white, it's bullish confirmation of what started off at a low. And it happened at resistance. Of course, it was on news. And this market that I like to call Mr. Schizophrenic just loves to, I don't want to use that word, mess up traders. So, on this day, as it was moving up to resistance, it was foolish to get aggressively long into that resistance. Nonetheless, it did look like it was going to go through it. And, President tweeted, down it came into that support. And yesterday, the big gap up. And, our factory work, if you've been here for a while, we look at the big wide range bar like that. And we just look at the midpoint of it and it gapped above it. So that in itself is a starting point. It could have gone down from there, of course, but it never broke down from the low. And it closed positively. It's an inside bar, but still bullish. It held on to the gain. It's still at resistance, and it's at what, let's call it almost 343. So right up near the high up here, gapping up above the high. As you can, well, that's not trading. We're going to look at the futures. This one is trading. And I keep that on the 5 minutes to get a little bit more detailed. But anyway, it's gapping above this high over here. So what's our factory work? Well, it's gapping above resistance. It's supposed to become support. That's the theory. It's only a small gap. So if it pulls back into there, that's where buyers are supposed to set up. And they could come into here, but it should not go down below. Let's just call it 340 and a half, give or take, something like that, because that's a little base there. And it would be breaking down under this little 15-minute wide range bar. So, that wouldn't violate things terribly. But when we see strength like that and a big red bar ignored, we just want to see it stay up here and hold on to the gain. Even if it has to chop sideways a bit, don't go back down under, especially don't go back down under yesterday's low. So, pretty simple. That's what we don't want to see. And whatever it does today, consolidating, going higher, it just stays up in this little zone that I've marked here. And then it opens up the door to going all the way back up. Now, people are now talking about this head and shoulders bottom. And I did point that out in our letter as one of the possibilities or scenarios of that possibly happening if this held up here. And now it did. It certainly didn't look like that was going to happen on that big red day. It looked like it was heading lower, but that is what bullish market environments do. I certainly can't call that a bullish trend, but it's definitely bullish price action, especially at the fact that it's at this resistance level now. So ideally, the ideal historical pattern would be for this to go sideways a little bit more. And sometimes people talk about symmetry. Not so much into the symmetry part of it as its ability to stay here at this resistance area and not go down. So yesterday was the beginning of that bullish confirmation. And let's just say, by the end of the week, it's still there. And then, I think that would be a pretty much of an ideal situation for the bullish case to move up above that resistance area, building a little bit of a larger shelf over here at that resistance. Sam's asking me if is SPY now in an uptrend to higher pivot lows? or does it need to also have pivot high? Well, it violated, right, the uptrend when it broke here. So let me just clear this mess that I've made. I can push this back. So once it broke here, it then went down to the next level. Pretty simple. You look to the left, as it says here. You don't need no fib lines. You don't need anything else. Just look to the left. Keep it simple, stupid, right? That's what works, not the mystery indicators. And it held there. And so now this became our new reference point of major resistance. Now, as I say in the room, almost on a daily basis, one concept like a pivot is not a strategy. It's one concept. So looking to the left is one part of our concepts, and it held there. The next part is retracements. And the retracement from this high to this low is 100%. And that's bullish. So it has a void up above here. The way it came down obviously was bearish. And so now, as I said, I'd like to see it go sideways a little bit. So the depth of retracement, it's still in a sideways trend. It's in a sideways trend. It's not going to be in an uptrend. This is still in an uptrend because pivot high, pivot low. And so as we go to the weekly chart, that old high is going to be significant resistance. And we're all wondering, can it actually push above that high? That's resistance. Well, we're all going to find out together whether it even gets through here and can continue into the void and get up there. So when it does, looking at the weekly chart, that could become an M top, as we get closer into the election and the uncertainty of that. Everybody may become a bit hesitant to press the accelerator. We shall see. But this pattern for getting the news is one in which you've got this move, and pullback that can become an M top. We'll see. And now we discussed before the monthly chart, which has had a big move. It got above here, and we got this big red bar. And so this is just the beginning of the month. It's only been a week, so we really can't place much on this yet. But we just look at the range, and the further this pushes into that range, which would require this to move up into here, right, the more this begins to look like a consolidation within the bullish trend. Right. We'll have to see where it ends. How do you define sideways in SPY now? Well, it's not in an uptrend. It violated the uptrend. Right? This was an uptrend. It broke major support, the pivot low prior to the higher high, so it's not in an uptrend. So then it made a lower high and a lower low. It came down to the next support, and the depth of retracement now is just in a sideways trend. When it violated here, I couldn't call it a downtrend yet, but it made, a lower high and a lower low and just kept going down. So now I call this a sideways trend. It's not a downtrend and it's not an uptrend. This is an uptrend. This is an uptrend. And in an uptrend, we do make assumptions that it can make a new high. But as far as this has moved, it's, questionable whether this could, say, continue to move up with the same momentum. Or how do we measure momentum without indicators? All right. Oh, momentum. It never even made a pivot low. Momentum. It never even made a pivot low. Right. The distance between the pivots. Exactly. So here, he had that move. So now, by next week, right, assuming that this doesn't go down here, the software is going to mark this as a pivot low. And we've got a pivot high. They're pretty close together. Now, what we would want to see from the bullish case is that it doesn't make a peekaboo above that high and start coming in again, because that would then tell us that the momentum is slowing down because the distance between the pivots are going to get closer together. And okay, your indicator people are going to, do this, right? After the fact, of course, if it fails, then they're going to say, look how my indicator worked. But over here, if it takes out that high and forms a red bar, you already know the momentum is slowing. That isn't a reason to act on it, but it's a reason to recognize what is. So we'll see if it actually gets up there and what happens. So as this depth of retracement here has occurred, and if it goes sideways, one of the scenarios that I spoke about was this possibly turning into a failure, which it still could happen, not totally out of the woods, and this turn into a measured move to the downside here and come to 300. Let's see by the end of the week, where we got 2 more days. Let's see what happens here. Now that red bottom of that red bar is what your significant line in the sand is for support, even though it's not a pivot. Common sense says that this bar being negated, it shouldn't violate down below that. So we see what is, and then we see how things play out. And let's take a look at other things. So that was a lot of talking and education to understanding price action here for pre-market. And I don't want to steal old Dan's time, so let's move on here. Qs, see, this is what I'm talking about with a little bit more of the symmetry. So I actually like, while the Qs have underperformed, as far as beginning to move up above here, I actually like the Qs a little better than the S&P. And I actually like the fact that this showed the relative strength as a head and shoulders bottom. This is more of a historical type of a head and shoulders bottom than the S&P is. So this sideways price action, I like it better if it can get through here than I do the S&P. So we'll see how it plays out. The Russell, what a comeback, right? What a piece of trash it was here, failing over here where it looked great, coming down and coming back up like this. It's just nuts. And so now it's exceeded this high. So what I talked about slowing momentum, first we'll see where this ends up in the next couple of days. But what we don't want to see is momentum slow down immediately and get a red bar next week. What we want to see with a pattern like this is that it continues to push higher up to the old high. So I'm providing you with a playbook, if you will, as to what should happen based on the bullish action that we've seen here and what to interpret if it begins to stall. And so now it's at almost 162, gapping up here. So, several days up and a gap up like that. I think a little caution is warranted here. At the beginning of the day, we'll see what happens. And I mean that on a short-term basis as far as, the beginning of the day starting. Head and shoulders pattern negated. I told you about this probably a week or 2 ago, and I explained, right, here was the neckline. If it breaks, that's a problem, especially with a wide range bar, but getting above here negates the pattern, and that's bullish. And now, it's up there at the prior high. And, so confirmation of what we've seen. It is what it is, right? It looked like bears were going to take control. It was pretty convincing while it was happening. And now we've got new information that says change that thought or you're going to get clobbered. And let's take a look at the futures here. Where are they at? How they look? You got a 180 reversal. And so we got 24 hours, bars here. We've got a 180 reversal, and it's big, right? So when we look at the concept of a 180 reversal, just a matter of a red bar being followed by a green bar. and it went down and it went all the way back up. So another retracement concept between bars versus between pivots. In a smaller time frame, it is between pivots. So it's a big 180 reversal, wide ranges. And so that obviously is bullish, and it should not go below that. It goes below that low, you're going to have a lot of people on the wrong side. They're on the right side now. I mean, that pullback that was, well, you can see it here, was just, falling, the proverbial rock off the roof, and just stopped and sort of grinding its way up. So as I'm looking at this, watch out here, right? Pull back under the wide range bar, right up in the high, could be an M top. Right. All right. Qs. Right. Similar pattern, green, red, red, right up at resistance here. Holds on to the gain, and factory work, back to the factory work, right? Stay in the upper half of the green bar, whatever you're going to jiggle around. Ideally, if it pulls in, it stays above 11,400. That would be good. The higher it stays up above here and jiggles around, the better it is. And we have the Dow actually showing a little relative strength here, pushing up above the highs and now into the void. Backing off here, pre-market. You see where the old high is, possible M top. Pretty much the same story, a little bit different pictures here and there. Here's our Russell. Already looked at that. No need to review. Bonds up here, getting closer to the target area down there. And so we'll see, breakdown just jiggling around here in the bottom, pretty much in the bottom half. Maybe I got a little bit further than that on the green bar, but 180 down. And so now we just continue to the factory work. Right, there's a red bar, stay in the lower half, and then go down to the target and we see what buyers want to do. Oil up here a little bit. Retracement, kind of wild price action, so we see now a consolidation after a breakdown. So it's not out of the woods as far as this breakdown goes yet. Now we'll see where this bar ends and if it can get above those highs. You can see the resistance that it's coming into. Gold, still working on the recovery. I don't know what's going to happen here, but I know this is still in an uptrend. And so my expectation based on the higher timeframes, monthly, weekly, is that this should become a shakeout and get back up into here. And if it does that, it should be off to the races again. It's going to take a little while. And silver. Obviously came down a lot harder. It's in the bottom half of the red bar. And so it's working on building, whether that's a new foundation to move up from or a new launching pad to the downside. I don't know yet. We'll just have to wait and see. And I guess here we are. So a little bit of caution here as always, but the gap up after this hourly run that we've seen, up into this area. So we'll see what today brings. As I said, ideally, I'd like to see a little sideways price action, and then maybe next week. So we'll see. Let's take a peek at our internals here, where they're at. Sentiment hasn't pushed up above 0.80, but you can see it's real close, and breadth is into the bearish territory. That doesn't mean the market's going to turn. It's just up there. It's telling us, what? Maybe it could become a little more bearish, and sentiment could push a little higher here. But as that happens and you get the wrong way option traders, stepping up on the call side more so, that M top maybe just plays out, or look, we don't know what's going to happen. So far, this looks bullish, but if we had another update today, I'd just keep in mind a breakout failure could happen. And then, when today's bar is done, we'll use today's low tomorrow as our first reference point of support. So
Hey,
all
Greg.
yours, Dan.
Yeah, but hey, Greg, on breadth, you know how you and I studied under 200, 300, its snapback is imminent. What's the highest you've seen breadth before?
I don't recall. I'd have to look at the history, but
Like
the
131 is
downside I know is
right, is
about
easier. That's what
340. I
right,
don't
right. That's what
remember
I
that
said.
the upside ever getting up there, but we could look right here.
Okay.
Coming off of the low, and that's what you want to see coming off of a move down like this is that it goes to a crazy extreme. And so I just go here and that's on. Hold on. See what that high was here. It'll show me. So many numbers there. Go ADD. I don't know. This is comprised of other things. I don't know. You can kind of eyeball it what it is, but it looks like it's close to around 300 or so.
Okay. All right. So it is equal distance of the downside. Okay. All right. That
But
answered it.
what? Okay, so now that you've opened up the conversation, but you see what happened here? Let me point it out. Of course, I have to point it out. You see how it came off of this bearish area and pegged the bullish one in like a day or two?
Yeah,
That's indicative of a low.
right.
This
Right.
is more indicative of a grind, kind of a move that can turn down when it reaches that area. But this has to agree.
Right. I follow that. Yeah.
Right? So, I mean, this is a big important point to take note of if you're going to look at this internal gauge, is that historically it explodes from a bearish area to a bullish area to a bearish one, and that is not bearish, it's bullish when you see it. So two different kinds of moves on the gauge. All right, Dan, all
And
yours.
well, McGraw is also asking you about the comment on the extraordinary breadth. I guess McGraw, we have
There's
been
nothing
talking about that.
extraordinary about the breath here. So here's the day-to-day breath. It hasn't even pegged 2000. Right? So, coming off of here, it went above 2000 and that was good. And then we got the bullish price action at resistance. So this isn't really extraordinary historically. Yes, and when you said that, McGraw, yesterday, that was one day based on the S&P. And I said, first thing I said was possible top, because when you get, that many advancers versus decliners, it usually happens near the end of a move. Now, you can see this here day-to-day breadth is a much broader measure than what you're looking at on SPX. And so you can see yesterday, it was good, but it wasn't extraordinary. So it really extraordinary. The beginnings of extraordinary are above plus 1500. That's where this red line is. And then getting up to 2000 is obviously even better for one day. Go ahead, Dan. You're not going to be able to review.
Oh, no worries. There's not much to review, and all our opens are fine.
Yes, McGraw.
So I'm just going to skip opens. They're all fine, unless you all have a question. I already went through them all. So let's see if there's any gappers. BAT21 mentioned CCL earnings. Now, accounting wise, I forget what B52 said. They lost over $3 a share. Accounting wise, I just think that's mind boggling. but this is a possible bottom. That's a beautiful gap reversal, and that's why I was saying I actually, if there was good juice on this, I was going to sell a put spread into earnings. I just didn't think, with all this negativity built in since March, that it was going to gap down a lot. That was my belief. So I'll keep an eye on that for a put spread. Yeah, DPZ's on my list right here. Bearish gap down. I would have loved for it to gap, just any, low 420s. and then take out a 15-minute low, and then we would be day trading short and selling out of the money call spreads. That would have been beautiful. IIPR looks fantastic. Yeah, that's going on the list. Yeah, looks great. I'm gonna put that in a separate window. I think that's the marijuana REIT, if I remember right. Jazz, Jazz is a bio, but yeah, it's a big bullish gap up. Cuervo Gold, they make tequila. 137. It's a bullish gap up. We'll keep an eye on it in the first 30 minutes. Yeah, ANET's on my list. ANET, yeah, gapping up 220. Big gap. I don't know what to do, but definite put spread watch. McGraw and B52, we're talking about some casino stocks. Caesars is in a trading range. There's absolutely nothing to do with that. LVS, garbage trading range, breakout failure 2 days ago. Penn, trading range, bullish 15-minute chart, pre-market, but daily is no pattern whatsoever. Dunking, maybe over yesterday's high, would be a day trade long. Knee, it's a moving train, McGraw. I don't know what you want me to do with that. Neo, yeah, Neo's posted already. I've been watching that for a few days, both as a directional and a put spread. I like them both. Yep, Neo looks great. Yep. There's your Momo. This purple here was a watch from yesterday. I'll put Neo here. Pan W. It's a sloppy trading range, but if Debbie were here, I would tell her it's an ascending triangle breakout. It's just the fluidity is not as great as some of our others that I like. AAXN, bullish 15-minute chart, not crazy about entering on the daily myself. Sebastian, IWF, I sent a telegram. Are you on our telegram? I just said IWF. Oh, IWF looks great. IWF and UPS. I said, let's wait until the pullback. Don't buy 5-minute high because of the gap. Our GRWG, we can do 5-minute high. MDC, it's sloppy. I'm not rushing into anything. Gap up here, we're selling off a little bit. It trades too sloppy for me. I know that's in the housing area. APHA, it's relative strength. It's a moving train. My trading plan is, unless it's genuinely on its own page, I want the broader market to be with me. With the gap up, big old tick here, I'd rather wait for a pullback. IIPR, yep, that looks great. It's also an ascending triangle if Debbie would get out of bed. Alex, isn't that your job? Wake her up. It's an ascending triangle. Yeah, beyond another gap. Yeah, I remember B52 mentioned it on this day on 10/5. And I remember B52 said it could go to 200. Look at that. Look at that going straight up. ISRG, it's a reverse head and shoulder with a big head. Some of you all have big heads, as you know. Big head. I don't know. It's right there at resistance. I don't know. McGraw is in love. We have a put spread on this. Plants for Irfan. Plants. Day trade maybe if the market decides to hold, but you're right here at this prior high, so I don't. I'm not crazy about it as a swing, but day trade over the high. Cron. It's a bottoming piece of junk. If that's your style. I know B52. That's what I just said. Plant. Yeah, I just answered that. Amazon.